So welcome to our September 28th, chapters 1 through 4 review session for Accounting 201. I did say if somebody asked me what's on the test, I would tell them everything on the test, chapters 1 through 4.
Right.
I also said come with questions because I'm not going to initiate any of the dialogue, but I will answer anything and everything one has to ask. I will share that the exam, I believe, is about 62 questions. It's about 150 minutes, so roughly 2.5 minutes per question. So budget accordingly and plan accordingly, but that's where we lay. So what questions do you have and how can I help?
So like at the beginning of the semester, the chapters, we did like transactions and then we did like journal entries. Like what's the difference?
Okay, a journal entry is a transaction, but it's a transaction with a debit and credit. We were doing transactions in the beginning. We weren't calling them debits and credits, even though that's what we were doing. We were adding them to the accounting equation. So if you went in, and I'll do a quick whiteboard here. If you went in and you were looking at the accounting equations, so we would go in and do a transaction that we might get cash received for services rendered. So we got $200. And then we'd have equity, $200, because revenue minus expenses, you had revenue on there, minus expenses of 0. And we just kept things in balance. So what does that mean? Well, we debited cash and credited revenue. Same thing. It's just that in chapter 1, we didn't say we're debiting cash and crediting revenue. We're saying we're adding cash and adding revenue. But when we got to chapter 2 in debits and credits, now we're able to do a journal entry. So when we do the journal entry, we type it out and we say, oh, I know what journal entry looks like. So I can go in and say cash debit for 200 and sales revenue or whatever, sold stuff, 200. A journal entry in good form has a description, sold stuff, and we also throw a date on there because it's a good thing to do. So we'll go ahead and do 1/5/X1. Okay, so there we go. There's our journal entry. So we were really doing journal entries in chapter 1, but don't tell anybody.
Okay, gotcha. So it's like, I guess going further into like the chapters, like chapters 2, 3, and 4, that's more like specific journal entries.
It was a combination of transactional journal entries. So let's go back here and I'll draw again. So you have the journal entries, the debit, the credit, debit, credit, sometimes 2 debits and a credit, sometimes a debit and 2 credits, whatever it might be, you indented, had a good form. But then we had a trial balance. We had a whole bunch of T accounts. So cash, receivables, payables, whatever it is. We took the bottom line that we posted from the journal entry into the T account. We got a total and moved it to our trial balance. So everything from a T account went on our trial balance. And then we had some go to credits, some debits, some credits. Here's our trial balance. If I can spell right. Then we have our adjusting journal entries. What were the 2 rules for adjusting journal entries? Never what account? Adam, you can come off mute too. Share and share alike.
Never adjust cash.
Never cash.
Yes.
And Angel, 1 what and 1 what?
1 debit, 1 credit.
True. That's not what I'm looking for. What kind of source do they come from? What kind of document, what kind of statement do they come from?
1 income statement, 1 balance statement.
Bingo. Well said. So always 1 balance sheet, 1 income statement, because we're usually transferring back and forth. You've seen this picture every class, almost every class. So we might be depreciating an asset and getting depreciation expense. We might have unearned revenue and making it earned revenue. We might have wage expense, have a expense and record a payable for wages that we have to accrue for or estimate for. that making sense?
Yes.
It's supposed to. What else do you want to talk about?
I guess I'll jump in.
Please.
Are you writing these questions based on what has been discussed in the class?
You're asking, will the questions be in order on the exam?
No, I'm just saying, are you writing these questions based on what has been discussed in the class?
Based on what's been discussed in the class and has been accomplished in the homework.
Okay.
And by the way, just to warn you, the questions will be scrambled, which means it doesn't go nicely. Chapter 1, chapter 2, chapter 3, chapter 4. And I'm not doing that to give you a hard time, but I am doing that to give you the idea that you're not going to be able to go back and forth in the book, or notes or jumping around. You really have to come in pretty well prepared on the material. Welcome, Sammy. Glad you can make it.
Yeah, I actually thought this was in person, so I'm leaving campus now.
Okay.
But I'm gonna be listening, and
Okay. Well, we got a couple of questions
I've
already.
told them.
This is being recorded, so if you want to review it later on, you'll be able to.
All right, thank you so much.
You're very welcome.
Yeah, I'm on my way home, so
Okay.
Can I call y'all in the meeting whenever I reach home?
Sure can. We'll see you then.
I apologize, sir. Thank you.
That's okay. All right, jump on in. What else do you want to know?
And my other question is, we have this bizarre situation where this individual exam, it has a longer time than the final exam
Maybe,
So-
maybe not.
in terms of maximum time that you have.
We will see. Although I will share that one of the reasons I'm giving long exams, chapter exams, the same kind of questions will be on the final, and you'll be able to use these exams, which are pretty comprehensive, as study material for your final exam. So you're right. We'll see how long the final exam is going to actually take, and how many.
Well, we're
questions
doing
we
this in
actually
we're doing the final exam in person, right?
Not sure yet. Again, COVID up in the air. I'm guessing we will, but no guarantees.
Well, I mean, like, if it is going to be in person, is that your plan to do it in person?
I'm not sure. You will know. You'll show up in the right place. I have no doubt, but I'm not sure if the exam will be online or in person. I'm guessing it will be in person, but don't hold me to it. And even if it's in person, we might have a bring a laptop to class in-person exam so that you will actually be executing the exam online rather than paper and pencil. I think I told you on Monday, on yesterday, one of my students who I met with, an hour later, I got notice from the provost office that she's on COVID isolation. And we were sharing a pen, and you start wondering things. So you can't be too careful these days. And I have 2 family members I need to worry about. And they worry about me, but that's okay. Other comments or questions?
Is profit margin and gross profit, are they the same thing?
Good
I
question.
mean, no, gross, actually, I don't know if that's the right question to ask, but sure.
You might be asking, are gross profit and net profit the same? Which I think you know the answer to that.
Or maybe gross profit and gross margin.
Gross profit and gross margin are the same. Two descriptions. But when you're asked for the term profit, typically they mean net profit, not gross profit. So how do you get to gross profit? What do you start with?
Net sales.
Net sales. Good, great start.
Okay.
And then you subtract what?
Cost of goods sold.
Cost of goods sold. And out of that, you get gross profit, or as Adam indicated, or gross margin.
Okay.
And then what happens? How do you get to net profit? Adam can help. Sam can help once he's on audio and video, maybe.
You subtract again.
Yep, you subtract. What do you subtract?
Ops expenses.
Operating expenses. I think that's what you said, which also is known as SG&A, which stands for
Selling, general, and administrative.
bingo. Well said. Okay. And then we're going to have, whoops, not double lining, just single line still under that. So we've got net operating profit. This is profit from operations. And then I put other stuff. Okay, interest if you're not a bank, any other types of expenses, selling a division, department, selling something off that's a one-off, that's not your main business. And then we'll go from there and we'll get net income.
So this is called a multi-step income statement.
Well said.
Is there something called like a classified income statement too?
There's a single step income statement.
Okay.
Okay, so let's look at that. That's the multi-step. What starts on a single step income statement?
Revenue.
Net sales or revenue, whatever you want to call it. And as I say, accountants make the big bucks because they talk about all the same stuff, different terms, gets confusing as heck. And now you're going to minus all expenses. And I'm going to put all net sales here because you're going to have sales from equipment that you may have gotten rid of during the time, and you're not in the equipment business. You're just happen to be a machine or vehicle or building you sold. You made some or lost some. All expenses. And then you get down to net profit, net income. So that's a single step. Obviously, the multi-step is preferred. Most of the time, you look at a 10K like we've been looking at in class, or we look online, you're going to see a multi-step. You're going to see a cost of goods sold, or it's called cost of sales, or cost of product sold, or cost of oil if you're an oil company. Again, we'll call it different names just to confuse us, but it's all the same thing. It's the stuff you sell. It's the milk that Walmart sells, the clothing, the food, grocery store sells. The cost of your goods, not including overhead, accounting, utilities, other wages, rent, whatever other expenses associated with running a business. And then you want to take you want a percentage of cost of goods sold as opposed to as part of net sales, percent of profit. So your gross profit margin can be either an absolute number or a percentage. And notice cost of goods sold and gross margin have to add up to 100%.
Okay. Oh, okay. Okay.
So if you look here, you're starting with 100% number there. And if I realize that my my cost of goods sold is 40%, my gross profit better be 60%. And then if I get down bottom line, I might get down to 5% is my net income percentage. If I get the right numbers in here. Okay. If you look at that, you might be given a cost of goods sold percentage and ask for gross profit. So you should be able to go back and forth and calculate that stuff pretty gracefully.
Okay.
But you're right. If you see the word profit, it can be confusing because always is profit. Is that bottom line profit, net income, or is that gross profit? Because that's confusing because they're both profits. It depends, right? But the reality is usually when you mean profit, net income, earnings, like earnings per share, same number is net profit, net income. And so when you say profit, you usually mean bottom line profit. In tests and quizzes, I make sure it either says net profit or gross profit. So the gross is not including other expenses.
So the percentage for net profit is related to net sales.
Always, yep. And again, not gross sales, but net sales. You got to take out two things from your gross sales to get to net sales. How are you, Sam?
I'm good. This is Hunter or Robert Erlong.
Oh, okay.
I'm just on my grandma's computer.
Oh, okay. Well, I won't call you grandma anymore. If you want to come on screen on camera, you're welcome to. And if you hit the three dots on your name, you can put your name on there too, just so we can share and share alike. I didn't recognize Sam Cribb, but that's okay.
Yes, sir.
Yeah, you click on your picture, the three dots on the upper right, you can rename and pop your name in there temporarily.
Oh,
Then if you come off, if you turn on video,
I see it.
there you go. Thank you. And this is being recorded. You were warned when you came in, but
Yes, sir.
I had a couple of students request that they had practice and other things and couldn't make it. Perfect. Thank you, Robert. And if we can see your smiling face, even better, but your choice. All right. So again, this is a review session to answer your questions, not for me to tell you what's on the test. But probably, if you ask me questions, I'll probably steer you towards things that are on the test. I ask that you initiate the conversations. So other questions you have?
I had a problem with the homework that's due, I think it's tomorrow or Friday, with the assessment.
Okay, let's talk about it.
Okay, it says that FOB destination, but the seller asked the buyer to pay. And would this give credit on the bill?
Okay, so you're comfortable with FOB, free on board, right?
Yes, sir.
So there are two free on boards. One is shipping point and one is destination. And so you're saying goods were shipped FOB shipping point or destination?
Destination.
Okay, so FOB destination. So in theory, the seller is responsible for shipping, is responsible for insurance, is responsible for keeping it in their inventory. And when it gets to the destination, it now belongs to the buyer. So you're saying the seller requested the buyer pay for freight.
Yes, sir.
Okay. And I think in chapter 4, we talked about perpetual versus periodic inventory. And freight is added to inventory cost, right?
Yes, sir.
So if Best Buy buys a TV for $400, they sell it for $500, but they pay $10 in freight, it's actually $410 out of inventory coming. It's $10 is added to inventory. So back to your question, you're saying, is it?
I need to know how I would enter that in the journal.
Okay. So the journal entry would probably, and I don't know the problem, but probably you're going to debit the inventory and you're going to credit accounts payable. Okay. So there's a freight account when you're accounting for freight. And I will say this, we're probably not going to get that detailed on the exam this round, but I mean, it's good to understand it. but knowing that it's added to inventory is good to know at this point. But you will have the seller, you're asking how the buyer records it, right?
Yes, sir.
Okay, so the buyer's gonna have an obligation to pay the freight, and then the inventory is gonna be picking up whatever the cost is of the materials.
Okay.
And by the way, if you ever want to go through individual problems, or if you ever have challenges, you want to reach out, let me know. And
Yes, sir.
we'll go one-on-one, and make sure you understand and where things fit. Or if you get something that baffles you and you've been working on it, get a little frustrated. By the way, a little frustration is good, because it gives you the challenge and you kind of go after it. A lot of frustration is not so good. So I'm happy to review with you any other problems or issues you might have.
I think that was the main one that I had.
Yeah, cool.
Thank you.
You're very welcome. All right. Other comments or questions?
So on the test, you said it's multiple choice, but like there isn't, I guess like there's no journal entry, like how we did with the charts and everything like
There
that.
will be, there'll be picture journal entries. Some of the multiple choice will actually have journal entries
Okay.
as the options. But you don't have to write a journal entry.
Mhm.
They'll be presented to you and you can just pick the right one.
Okay, gotcha.
Save some writing, save some penmanship. I
Mhm.
know how I write because you get to see my whiteboard periodically. So, and I know how some of my students write. So better that neither of us have to write at this point.
Okay, so the ratios that we need to know, that what I think it was at towards the end of chapter 4 in the textbook, it asked about like an acid test ratio. Do
Yeah, you
we-
probably want to understand what an acid test ratio is. Okay. Versus current ratio. So hopefully you know what's a current ratio.
Is it current liabilities over current assets?
And yeah, it has current assets and current liabilities. So which is of the numerator? That's the question.
Assets.
Adam or Robert, any idea?
Not a clue.
Assets over liabilities.
Assets first. Yep. CA over current liabilities.
Okay.
Okay. So what's that mean? If current assets exceed current liabilities, you're greater than 1, and you're in pretty good shape to pay off your current liabilities. If current assets are less than current liabilities, you're less than 1. Might have some challenges paying off some of those obligations. And 0.8, 0.9, not so bad. You get down to 0.3, 0.4, that's getting pretty bad. And you might have to sell a fixed asset or generate a whole bunch of new business to pay it off. When you get to the acid test or quick ratio, same name for this or different name for the same thing, you have the quick assets over current liabilities. So what's a quick asset? Well, very liquid. Cash is a quick asset. Okay, you're going to turn that over pretty quick. Okay. Accounts receivable, pretty quick. Okay. Even inventory is fairly quick. But you got some things on current assets that are prepaid insurance. That's going to drag on. You're going to have some things. I mean, you want the liquid stuff in your current assets. So the kind of things, I'm sorry, inventory is not included. I don't know why I included that. Because inventory can be obsolete. It can be sitting there. As a matter of fact, banks like using the acid test ratio or the quick ratio better than the current ratio because they're going to get rid of the stuff that's not going to be very liquid. So cash, marketable securities, receivables, those things are coming in pretty quick. Anything that's going to be longer than that, they're going to discount, not include in the ratio. So it's going to be a smaller number, but it's also a better indication of how liquid you really are. Does that make sense?
Oh, okay.
So cash, marketable securities, those are the kind of things that are the short-term stuff that's going to be easily turned over.
Okay, so we need to know the asset test and current ratio. And then we talked about gross profit margin already.
Gross profit. Talked about net profit. Talked about ROA. What's the formula for ROA? Return on assets.
It's total assets over net total income, net income.
Return on assets. Return over assets. Right? Just like it sounds. So what goes to the numerator?
Assets, total assets.
Let's try this again. What
Numerator.
goes in the numerator?
Net income.
Net income, return. Exactly. Okay. So if you're looking at this, and I've said this before, return equals net income equals net profit equals earnings. These are all earnings per share. There's your earnings. Return on equity, return on assets. That's your net income. That's your bottom line. So if I'm looking at that, I've got my return. So here we go. I got my net income. And here's where a lot of people get hung up. What am I dividing by?
Total assets.
Total assets? Almost there, not quite. No.
Average assets.
Thank you. Bingo. Why average assets? Well, net income is for what period of time? Is it a point or a period, I should say?
Period.
It's a period, usually for a year. Your assets, is that a point or time or period of time on the balance sheet?
A point.
Point in time, bingo.
Mhm.
So you need to average your beginning and ending assets and divide by 2 to calculate this ratio. Anytime you mix an income statement item and a balance sheet item, you're going to need to take an average of the balance sheet item. Earnings per share, earnings, net income in the numerator, number of shares, average number of shares for the year in the denominator. Return on equity, net income numerator, average equity in the denominator. But if I do a debt ratio, I go straight out and I say, oh, I know that. I can do a debt ratio. What's our debt ratio? How do we calculate debt ratio? Robert or Adam, come on down. How do you calculate a debt ratio? Sammy, any idea?
Total liabilities over total assets.
Total liabilities over total assets, bingo. Now notice I didn't take average liabilities. I didn't take average assets, didn't have to, because that's a point in time. They're both a point in time. I can have my debt ratio at the beginning of the year. I can have my debt ratio at the end of the year, which is what we normally do. But because my ROA, return on assets, includes an income statement item and a balance sheet, I do need to take an average.
And you take the average for the balance sheet.
Yeah, balance sheet on 10K shows 2 years of data, end of year last year, end of year this year. So what's going to happen? I know I say beginning plus ending divide by 2, but it really is ending last year, ending this year, add them together and divide by 2. Making sense? I sure hope so. Okay. Other comments, questions?
I don't know if y'all have already went over this, and it's on chapter 2, but I'm having some trouble with debits and credits in the T accounts.
All right, let's talk about it. I don't mind. We probably haven't. We actually compared chapter 2 to chapter 1. And chapter 1 is just doing debits and credits without calling it debits and credits. But chapter 2 is actually, we execute debits and credits. So, all right. So what's your question?
Just kind of need help with the double entry system like we were doing in class, but I never really grasped the concept.
All right. So we had that accounting cycle thing going on, right? So we had the cycle doing things. And so what are we doing? We're going ahead and analyzing a transaction. Okay. We journalize it, making a journal entry, debits and credits. Then we post to what? To where?
Ledger.
To the ledger. And from the ledger, we don't post, but we put it on our
Balance sheet.
Or trial balance.
trial balance.
Oh, okay.
And then we make our adjusting journal entries
Okay.
and end up on adjusted trial balance. And then we have our closing entries. And we have our ending trial balance. So let's talk about the flow, the cycle, the content. So we analyze a transaction. We say, oh, I got an invoice. Utility company sent me an invoice. So let's do a journal entry. I'm not going to pay it yet, but do I debit expenses or credit expenses?
Expenses are debited.
Expenses are debited, great. Assets and expenses are debited. Liabilities, equity, and revenue are credited normally. I mean, we have that contra asset called accumulated depreciation. We have a contra revenue called returns and allowances, sales discounts. But typically, our assets are debited to increase them, credited to decrease. Our liabilities are credited to increase and debit to decrease. Equity the same, revenue the same, and expenses are like assets. If we debit, they increase. If we credit, they decrease. So let's go back to our $300 utility bill. The first thing I say is pop the numbers. And then pick one aside of the transaction. So we know we got an expense going on for utilities. I told you we weren't paying cash. So if I'm not going to pay cash, where do I have to put the $300?
Accounts payable.
I owe the money, I got to put it in accounts payable. So I'm going to go ahead and take my utility expense. You told me to debit that, and I agree with that wholeheartedly. And then I'm going to go ahead and take my accounts payable. So there's my journal entry. I got $300 going into my expense down here. And I got 300 going up here as a liability. But how did it get there? I actually create T accounts. So I have a T account for utilities expense. I have a T account for accounts payable. I have a T account for every potential line item: cash, inventory, unearned revenue, sales revenue, equity accounts, liability accounts, assets, accumulated depreciation. But in this case, I'm going to credit my accounts payable for $300, and I'm going to debit my utilities expense for $300. So we're looking at the big picture. We analyzed the transaction. We said, oh, we got a utility bill. It's going to hit payables and expenses. I journalize it with this journal entry. And technically, I'd put a date on there and a description. Then I post it to my ledger. So my posting is actually physically putting it on the ledger page.
Okay.
And now what do? Oh, I got a trial balance. I'm going to have to take these bottom line numbers. Oops, let's get that. and go into, I've got 300 here. I got 300 here. So now I have a chart of accounts, all cash, AR, inventory. Actually, you know what? Like so much neater when I type the text, doesn't it? So I'm going to do that. So I'm going to have cash, going to have accounts receivable. I'm going to go ahead and have inventory. I'm going to go ahead and have equipment. I'm going to have accounts payable. Might have bonds payable. I have common stock. I retain earnings. I have sales revenue. If I can spell it right. And then I have utility expense. I'm just gonna have one expense on this whole, my chart of accounts. But then I'm going to not post these numbers, but I'm going to take and on the T account on my trial balance, I'm going to throw my $300 in utility expenses debit here. Okay, which is that number. Oops, that number. I'm going to make my 300 accounts payable and put it here. So there's my trial balance. And I'm going to have every account, every subtotal, whether it's debit balance or credit balance, thrown into my trial balance. And then at the end of a time period, either a month, a quarter, or a year, I'm going to have adjusting journal entries. Never cash. Angel let me know that it was one balance sheet, one income statement account. Cool. So I'm going to go ahead and take my, I might have accumulated depreciation. So I'm going to have some depreciation expense. I'll add that here of $1,000. And then I'm going to have accumulated depreciation of $1,000. You say, wait a minute, accumulated depreciation, it shows up on the assets, but it's a credit balance? The short answer is yes. It's going to reduce the asset value. So if I have a $10,000 machine, I depreciate $1,000. My net book value is only going to be $9,000. Next year, it's going to be $8,000. The year after, $7,000. If I'm doing a straight line depreciation, same every year. So what's going to happen? I'm going to make this adjustment. I'm going to have my adjusted trial balance reflecting all balances coming through here. Trial balance plus or minus adjusting journal entries. And it's still my total debits and credits are going to be equal every time. So I have an adjusted trial balance. Then I close out my temporary accounts. What's an example of a temporary account? It's going to be zero at the beginning of the year.
Accounts receivable.
Do my accounts receivable zero out? I give them a jubilee year and say, you don't owe me any more money. That's nice. I wish. As I payables, I wouldn't mind so much, but receivables, I want my money. Not that I'm greedy, just I need to stay in business. What doesn't go to zero?
Cash.
Receivables, cash, inventory, it's still on the shelf. My building's still here. My payables are still there. I still owe money to people. My equity is still there. My investors have equity involved. So give me an example of account that's disappearing or goes to zero.
So like expenses and revenues.
Right, exactly. All my income statement accounts, they're called temporary accounts. My balance sheet accounts are permanent accounts. My income statement accounts are temporary accounts. My income statement accounts are all, my sales go to zero. Starting January 1, I'm at zero sales. Or whatever my fiscal year is, the first day of the year. I have zero rent expense. I have zero wage expense. So when I get my closing trial balance, I only have balance sheet accounts. And I close everything to retain earnings.
So I think like, I think when we were doing the homework and we were closing it out, it was like you for revenues, you would You would debit revenues,
Debit
then-
revenue to zero them.
then you would credit the retained earnings.
Yes, although in the book, it credited income summary and then it debited income summary and credited retained earnings. So
Right.
ultimately, that's what you're doing. You're crediting retained earnings. So retained earnings goes up with revenues, right?
Right.
Retained earnings goes down with expenses. Retained earnings goes down with dividends.
Mhm.
And dividends are never an expense. They're never on the income statement, other than dividends received. If you buy some stock and you get a dividend, that's dividend income. But the
Mhm.
dividends you pay as a company to your stockholders never shows up on an income statement because you can't just deduct dividends as an expense. You
Mhm.
wish you could, because then you don't have to pay any taxes. But IRS would have a really hard time with that.
I think like one of the hard parts about the homework when it came to like the closing entry was doing the expenses, because they would do income summary debit and then you would do the credit and then
Credit the
it's like
expense to clear them.
right. So like the posting was just like different, I
It
guess.
it feels backwards, doesn't it?
Right, exactly.
So you credit the expense and you either debit retained earnings, like I'd rather cut to the chase, go to retained earnings, but you actually credit the expense, debit income summary, and then you credit income summary and debit retained earnings. You're still debiting retained earnings ultimately. You're still reducing retained earnings because of your expenses ultimately. And I'm glad we're reviewing this because I'll tell you, this is not natural. We're not born wired this way to figure this out. But we do it 3, 4, 5, 10 times. Hopefully it sinks in a little more each time.
Yeah,
does take-
those kind of the stuff I need to work on.
Okay, it takes
Um,
practice,
Yeah.
but no surprises.
Mm-hmm.
Does that
Let's
help at
see.
all, Sammy?
Yeah, that helps. I'm about to see if I got any more questions on chapter 2.
Okay. I'm going to clear the screen right now. Start fresh. Robert, anything on your mind?
No, sir.
Is this helpful or is this pretty much a review of stuff you already know?
It's been a review for the last little bit, but
Okay, good. Anything on your mind, Adam?
For this income homework spreadsheet, for my net income, do I use net income or net income attributable to said company?
Okay. You recall the instructions I gave in class
About what specifically?
about net income? Which net income do you use on the income statement or the statement of operations or the statement of earnings, whatever it is that has revenues and expenses? The same way I say, go to note 1 and go back a page.
Mm.
I say, go to earnings per share and go up a line. So you want the net income attributed to the company itself, not minority shareholders. But the bottom line is the bottom line on your income statement. That's the net income you use. Because you're right, there's an
So-
income attributed to minority shareholders or sometimes other shareholders are specifically itemized or mentioned. But you go to the bottom line, right above earnings per share, and that's the net income you use. Which also coincidentally is the first line of a comprehensive income statement, which is not the statement we want to use. But that's a good way to check if I got the right net income number, because that comprehensive income will start with that bottom line net income too. Does that answer your question, Adam?
Think so, because I have here the 4 lines at the bottom related to shares are net income per share attributable to Gilead common stakeholders basic, then shares used in per share calculation basic, net income per share attributable to Gilead's common stockholders diluted. Shares used in per share calculation diluted.
Okay,
And
so
then
you're not going to use
above
any of
the
that per
four
share data.
rows,
You don't need any of
above
that
the,
Adam, you don't need
Yeah.
any of that per share stuff.
yeah, but we're showing you is the one above that, of those
Yes.
four, is net income attributable to Gilead. And then two
That's-
lines above that is net income. And so when I look on consolidated statements of comprehensive income, they use the net income and not the net income attributed to Gilead.
Really? Okay. You want you want the bottom line net income attributed to Gilead.
All right, then.
Other thoughts? Anything else on your mind?
Could you explain like a journal entry of a prepaid insurance or such?
All right, let's walk through prepaid insurance. Fair question. So we get the bill in December 15th for a year's worth of premiums at $12,000, right? Or we'll make up some numbers here. Make the calculations easy. Okay. So we debit, credit 12,000. What two accounts are we debiting and crediting when we actually pay the bill for insurance in advance? Adam, you want to take a shot at one of the accounts? Or not?
I'm sorry, I was looking, I was actually changing my spreadsheet, so I wasn't paying attention. What are we doing?
Okay, we're doing a prepaid entry. I just got a bill on December 15th from the insurance company for next year's insurance. I prepaid for the year, $12,000.
So it looks like prepaid insurance would then be credited or debited.
Okay, we got two accounts. Prepaid insurance is one, very good. Robert, you want to take a shot at what the other account is?
Insurance expense?
What's that?
Is it insurance expense?
Not yet. We can't expense it because this is for next year. We have that matching principle. We got to match our expenses and revenues. So we're going to take $1,000 a month for the next year out of this prepaid insurance. But right now, we're going to write the check. You want to take another shot at what account we're going to hit?
Cash.
You bet. Okay. Is and pick the easy one. Is cash up or down?
Goes down.
Down. Debit or credit?
Credit.
Cash going down is a credit. You bet. Okay. So here's my credit to cash. So prepaid insurance. Where does prepaid insurance show up, anyways?
Assets.
We have prepaid insurance expense as an asset. You say, Scott, it's got expenses on there. Isn't that income statement? No, the actual revenue, the actual expenses are on our income statement. Unearned revenue is on a balance sheet as well. It's a liability. I haven't earned it yet. I'm going to move it down here eventually. The same way I'm going to move my prepaid insurance expense to actual insurance expense as I use it up.
Okay.
So come 12/31, we don't have to make any adjustments. But come January 31, I'm going to have to take $1,000 into account. So what $1,000 is that? Well, that's $1,000. I didn't write another check. I already paid the 12 grand. I have recorded 0 expenses so far for my insurance. So logically, I'm going to have to debit an expense here on my adjusting journal entry. And I told you my adjusting journal entries, we know it's one balance sheet account, one income statement account. What's the name of the expense account that we're going to debit? Anybody?
Insurance expense?
Insurance expense, great choice. Now, that's on the income statement. So we have insurance expense down here. But my next question is, what are we going to credit? What balance sheet account do we credit?
The prepaid insurance.
It better be the prepaid insurance, right? Why? Because we now have a T account, and we love T accounts. We have a prepaid insurance account that started at $12,000. We're going to credit $1,000 in January. And then we'll do another $1,000 in February, another $1,000 in March. What happens if our building burns down in March? Are we going to pay? Are we going to have an obligation for insurance to continue? Hopefully, we're going to collect some money, right? We're going to collect our insurance proceeds. So we'll have $3,000 that will, by the end of $2,000 we've written off. We're down to $10,000 in prepaid insurance. But now we get $10,000 worth of insurance we can't use. So in theory, we're going to get the money back. The insurance company says, oh, okay, we'll pay the proceeds, but you're not taking March, April, May, June insurance. We're going to go ahead and give you a refund. So that's an asset. Assets you can ultimately turn into cash or pay off liabilities. The same thing with unearned revenue. The insurance company has the opposite problem. They have cash that they received of 12 grand. Here's the insurance company, cash of 12,000, and they have unearned revenue of 12,000. And they're going to do the opposite. They're going to take unearned revenue. They're going to debit the unearned revenue for 1,000 and credit insurance revenue 1,000 in January, February, March, April, right on down the line. And if there's a fire in March, at the end of March, they're going to say, well, we've taken $2,000 we've used up so far. The other 10,000 is a liability. We've got to write you a check. We're going to debit the unearned revenue and credit the cash. We're going to pay it back. Or it's going to get used up by the end of the year. Over 12 months, 100% of it's going to be used. 100% of it will be expensed on the buyer side, and 100% of it will be turned to revenue on the seller's side. Are we good? Does that help a little bit, Angel? Does that reinforce it? Cool. Yeah, there's nothing really complex. It's just putting all the pieces together.
Mhm.
And there's a lot of pieces. None of this is beyond any of you. I know that. Other comments or questions? I will be available tonight later on. If you do have questions, you want to text me or text or email. I'll be checking both. So I'll do a final roll call. Adam, anything else on your mind?
Just one minor thing. For the Accountless Student Exchange group on LinkedIn, what did you say was the best source for the articles to use?
I probably didn't, but a good source is Forbes magazine, USA Today, or any of the journals. You're joining a professional group as part of your LinkedIn assignment. Actually, two groups. Get one of their publications, find an interesting article, or something that you think might be interesting to your fellow students, maybe on personal finance, maybe on tuition, maybe on government assistance for scholarships or for higher education, or anything else that you might find in business. Bitcoin dropping like a mad dog. or China, whatever their discussion on that was, or El Salvador, or anything that is pertinent to you, your profession. I think your sports management. So you might say, well, how about the business of the Ryder Cup? None of the players get paid. I guess they get paid a token sum, but they don't get paid to win or lose. It's for the honor of the Ryder Cup for golf. Or you can talk about the soccer scandals, or just the soccer in general, which is much bigger than American football and has a bigger fan base and a lot of other things going on. Or tennis, or basketball, or football. If you want to talk about Kentucky and Clemson, have a good time. Something that would be pertinent to the students relating to business. So they might say that the stands are empty or the stands are full because of COVID. What's the impact on that, on a team's sports, on their ability to generate revenue? They've been counting on monies and they're getting half the revenue or a quarter of the revenue they thought they'd be getting. Whatever, we want a business angle to it. But any article you come across, pop the link in the accounting student exchange. That's the other part of it. You want to post it, not in the general posting area, but in the accounting student exchange so your fellow students will see it. Does that
Is
help?
that gonna be due Friday? This Friday?
I believe it is midnight. Now, I think you have additional time to get the articles posted, but the actual LinkedIn assignment, I think I had different times for my online class and the live classes. And I'm doing the LinkedIn 5-day challenge right now. It's not too late to get in on that if anybody wants to. It's about 10 to 15 minutes a day, plus a 5 to 15-minute exercise, which adds a point to your final grade. But there's we're talking about some interesting stuff. We got about 50 people in the Facebook group right now that are partaking and taking advantage of some of that. So. Although I did get one person responding, she said she was a career counselor, and she says, I don't use Facebook. And I said, well, yeah, we can still get you the content if you want. She goes, yeah, I'd love to see the videos, but I don't want to use Facebook. And I'm saying, you're a professional career person and you're avoiding Facebook, but that's where your clients are going to be found. That's interesting. I thought it was interesting. But personal preference. That's her choice. All right. Angel, any final thoughts? Desires?
I think I'm okay.
Okay. I know you're okay. Okay, we're good. Sammy?
Still catching up on my work, but I should be good for the exam. I just had those couple questions,
Okay.
and I'll be studying again.
Studying's good. We encourage that.
Yeah, just gotta apply everything I study. That's the hard thing.
Yeah, you got to internalize it, make sense of it, and be able to apply it. You bet. Robert?
Yeah.
I'm good.
Oh, I know you're good, but no final questions?
No, sir.
Okay, not a problem. All right, this is being recorded. We'll be sending out the link and making it available because, like I said, some of our students did request recordings, but I also did say that ideally you'll be here to answer your questions. So hopefully, like I said, I'll be available, and I'll keep Zoom open for the next 45 minutes as well. If you're studying and you want to come back for any reason, I won't be recording it, but I'll have it. I'll be available, and I'm probably available to midnight if you have more questions as you're studying or as you're reviewing. So feel free to text or email. Although I may go to sleep before midnight, so it's been known to happen. Well, I thank you for the initiative. I think your classmates that are reviewing this are going to thank you as well, because they couldn't be here, but you were. So you took the initiative, and hopefully these questions will be answering some of their questions and reinforcing some of the knowledge, helping them to better prepare for the exam, which will be due midnight on Saturday and get posted tomorrow. I may post it tonight, but it'll be available through Blackboard, and it'll be in the Chapter 4 section physically, Chapter 4 tab. So I thank you for your time. I wish you success. And I will share, sometimes I do scale exams. There's sometimes questions that I ask that baffle most. And if that's the case, I will sometimes scale exams, or even quizzes sometimes. I find lately I haven't had to do that because I've had some real sharp students, and If I got a couple of people that are acing it, it sounds like a fair test. If I get everybody that's blowing it and everyone's, starting at an 88 or a 92, I'll probably scale it. That's not to go out there and say, hey, everybody, get half the questions right. Scott's going to scale it. That's not the intent. But so I know people, I've heard that happen, and people are very organized sometimes. Don't answer all the questions right, because I know I'm not going to, but no, don't go down that track, please. I look forward to seeing the results and appreciate your efforts.
Thank you for having us, Dr. Scott.
Pleasure
I
is mine.
appreciate your time.
Glad to help. Be well.